have a special guest joining us this morning. Avinash Gorakshakar is here to unpack all this for us. Avinash, good morning. Let me start first with US markets. In fact, the Nasdaq inched higher yesterday. Nvidia now happens to be the darling once again of investors. That stock was up about more than 4% yesterday. Valuation of the company at about $3.75 trillion. That's a mammoth valuation. Do you think at a time like this, when you know that all trade policies are going to favor the United States, does it make sense for Indian investors to park a little bit of money on international bourses, especially in Wall Street?
Yeah, good morning, Kartik. See, my guess is that NVIDIA, of course, reported good, strong numbers yesterday. And I think the markets were pleasantly surprised that earnings growth as well as the overall performance was much better than what the street expected. Coming to your question, whether Indian investors could invest in, US stocks, I think they could definitely look at putting a little amount of their capital here. But I think one needs to understand that, here basically allocations have to be done in reasonable quantities, and most importantly, you need to monitor these companies on a regular basis. My sense is that Indian investors were not comfortable with, I think, tracking global kind of news flows and the kind of environment that the US market follows. I think should not do that. But yes, somebody who has already invested heavily in the Indian market, has got a large amount of liquidity available, could definitely try out investing in ETFs or maybe direct companies, depending upon the risk profile. But I think net as you were mentioning on the Indian market, Kartik, my sense is that yesterday we saw a good rally. So today I think it would be a time for a little more consolidation. At least the near term, kind of tailwinds seem to be quite positive, because now the Iran-Israel war is over. I think things are getting back to normal. And I think markets would definitely now look at penciling the April to June, kind of quarterly numbers, which would now be expected very soon. Because once we have June getting over, I think again the market should start discounting how the first quarter of FY26 is going to pan out, specifically for rate sensitive, because the NBFCs, the banks, most of the financial intermediaries, according to me, could be a big beneficiary now going forward.
Well, of course, there could be the beneficiaries, but in fact, we are seeing trade inch up higher. In fact, the markets opened almost flat, but now we're seeing that Sensex and Nifty are both up about 0.3% or so. Meanwhile, I think what seems to be driving the momentum on Nifty 50 this morning, Avinash, seems to be the cement and steel stocks. Tata Steel is up about 1.4%, JSW Steel up almost 1.5%, and even the cement stocks are holding massive gains this morning. What seems to be the trigger for that, given the fact that we are still just a few days away from tariffs to kick in, especially on the steel sector, which is likely to be hit?
No, I think my guess is, Kartik, tariffs, I think the scare which came on April 2nd is now completely out of the market. I would not be surprised that it would be a conducive policy, because clearly on the metal side, we don't know what is the kind of, US tariffs which are going to come in. But I think clearly, on sectors like IT, pharma, auto components, I think what the markets initially expected was a little bit of a harsh treatment from the US. But I think looking at the fact that Donald Trump is looking at India as a very big market for US products and services, definitely I think say around August, or maybe little around September, I think the entire clarity on US India tariffs would be more or less in place. And I think that has already been factored into the markets. So to that extent, I think globally, whichever sectors are positioned like metals or pharma or auto components or IT, these could start moving up, because these were beaten down also very badly. So I think the markets have now penciling in a normal growth once September happens. And I think the second half is expected to be much better than the first half for all these globally positioned companies. Of course, domestic facing companies will also do well. But I think the markets are now looking at those sectors which were beaten down earlier very badly. And that is where the bounce is coming in today.
But the sectors that were beaten down also include the IT sector, Avinash, and that sector is finding it much harder than all other sectors to bounce back. In fact, despite Nasdaq inching higher yesterday and consistently for 2 days, we are seeing that the IT sector is facing tremendous stress this morning. TCS is down almost 0.4%. Infosys is down about a third of a percentage point. All this coming in complete divergence with what we are seeing on Nasdaq, and not just today. This is a new trend that seems to be emerging.
No, I think, see, my guess is that IT companies could show better numbers, only from the second half. The first and the second quarter is unlikely to show any major big fireworks. most important is, you got to understand that even as of now, the large client order wins have not yet come in for most of the larger IT companies. In fact, there has been some delay. And most importantly, only when we see the commentary and the order wins getting in more stronger and getting more accelerated, at that point of time, the markets would get a sense that growth is coming back. See, most of these companies, Kartik, have got very strong balance sheets. They're sitting on reasonably good order books. But I think what the market wants is growth. And I think this growth has yet not percolated down. So, you could probably look at companies like Persistent, KPIT, in the larger caps, you're positive on TCS. But I think for a bigger re-rating trigger, you'll have to wait post-September. I think that would be a time when one could see actual news flows and, data points to justify the rise. But as of now, I think these companies are going to remain in a very soft and a sideways only.
Right. Post-September, again, of course, the assumption being that the US Fed will go ahead and cut those interest rates, and that fight between Donald Trump and Fed Chair Jerome Powell would hopefully come to an end in favor of the India IT story. Meanwhile, I also want to understand from you, Avinash, we've seen massive volatility for the last 15 odd days ever since the Israel-Iran conflict broke out in the energy stocks. And that seems to, at least this morning from what we are seeing on the charts, that seems to have reduced a little. And the energy sector is now responding more favorably with fewer swings that we were seeing when the conflict was on. Now, let's assume that this ceasefire holds, at least for the foreseeable future, Avinash. What's the view on energy stocks from here?
So I think clearly with the cessation of the war between Iran and Israel, I think clearly you're going to see a lot of action on the oil marketing companies. Many companies which are basically, having raw materials as a form of either direct crude or their derivatives like aviation, lubricant companies, chemical companies, carbon black paint companies, these could possibly start showing a reasonably good bounce. In fact, once the announcement came in, you saw that upstream companies like ONGC, Salan Exploration, Oil India were beaten down. But on the other hand, oil marketing companies like BPCL, HPCL, IOC could show a strong bounce back. So I think it's a good kind of development because, for us, crude is a very important variable in our trade deficit. And most importantly, lower crude price also indicates a lower inflation. So I think you're going to see all the crude oil beneficiaries definitely perking up slowly and steadily. Of course, the numbers for April to June and then the second quarter, July to September, will be very important. And how soon, this crude price stabilizes, because, it's moved up from 65 to almost 79, $80 a barrel. So I think if the war does not continue and there are no further geopolitical kind of developments, then I think you could expect a decent kind of, at least a couple of quarters for these companies, specifically the oil marketing companies where we are structurally positive.
All right. You did mention inflation-sensitive sector. I will come to FMCG stocks in just a bit. But Avinash, I also want to understand from you what happens now to India's defense stocks. Again, anytime there's a global conflict, the defense sector seems to be doing well. Now that the conflict has eased, we are still seeing that HAL, BEL, companies which are well entrenched in the defense ecosystem are seeing great gains in trade. We saw this yesterday. We are seeing this play out today as well. I want to understand, in the context of NATO, in the context of Europe really increasing their defense budget, and estimates suggest that over time they may actually take it up to about 5% of their respective GDPs. Are we likely to see more flow of business to Indian firms like HAL?
Yeah, I think Kartik, understand one thing, that when the war cessation was announced, immediately we saw some selling wave in defense stocks because a lot of built-up had happened in defense stock companies. Normally what happens is that whenever there is a war in any part of the world, obviously defense companies are in demand. People expect that their business grows. But I think you must also understand that defense companies also get the benefit of replenishment of existing orders, not only from their domestic client, but even export kind of customers. And I think you're right that now globally, these kind of situations are getting regularly repeated. First, it started with Russia, Ukraine, then Israel, Iran. My sense is that Europe, as you rightly pointed out, is also arming itself quite considerably. And going forward, now Indian companies are well positioned to cater to even overseas markets. So I think if you talk about HAL or you talk about Bharat Electronics, Bharat Dynamics, these are all companies which are now well positioned to tap the export market also. So I think, these are companies which I think you should never see on a quarter-to-quarter basis, Kartik, because there's always going to be some lumpy growth and lumpy, kind of development quarter on quarter. But over the next, say, 2 years, these companies are very well positioned to capture that growth. and a domestic market is growing by leaps and bounds. The government is encouraging the Make in India policy. So I think, investors should look at these companies from a slightly longer term perspective and not from a short term angle.
All right, look at defense stocks from a long-term perspective, not short-term. That's the view coming in on defense stocks by Avinash Gorakshakar. Avinash, I want to now come to inflation-sensitive sectors, the FMCG sector especially. And again, like you mentioned, the real merit in looking at these stocks could perhaps come given the inflation and overall what happens in the US and whether or not India imports inflation from the US. But FMCG stocks, again, looking good in trade this morning. And again, this has been one sector which is fairly susceptible to volatility, at least not in the short term, but in the inflation-linked data as that gets released medium, month on month. So we are seeing Nestle India is up about 0.76% in trade this morning. Tata Consumer, on the other hand, is inching closer to 1% gain. What do we make of FMCG stocks, and those who are holding these stocks, what should their trading strategy be?
My guess is that this is going to be a good year for FMCG sector, largely because rural India, which was lying low for a considerable amount of time. This year, I think monsoons have arrived before time, and I think once rural demand picks up, you're going to see a lot of these FMCG companies benefit because a considerable amount of demand shift is actually coming from the rural markets, and I think once rural markets start getting better, you're going to see volume growth getting better. I think probably, in some companies, it could be closer to double digit. And I think, obviously with a better agri production kind of, lineup, most importantly, most of these rural customers would be having decent spending power. And plus, my sense is the government would also encourage, this kind of buy. I would say that, companies like Dabur, Hindustan Lever, typically, even companies like Britannia, or for that reason, even a Godrej consumer products look quite interesting because, these have been beaten down considerably from their highs. I think once you get a clear indication in maybe the April to June quarter on the volume growth, on the management commentary, the second quarter could be a kicker quarter because I think, most of the improvement would be clearly visible in the July to September quarter. But I think, yes, if inflation is under control, then I think that would also help these companies in keeping their prices low because a rise in inflation actually increases their selling price and their demand kind of trend. So net, I think things are looking nice. We will have to see numbers for April to June and July to September, Kartik. But at least, these companies, if there is any decline or maybe a small correction, I think investors should actually look at this sector now a little more positively.
All right. Well, of course, the July quarter and the September quarter are going to be crucial to look at that data. Finally, before I let you go, Avinash, I want to just get a sense of what's really happening in rest of Asia because Asia seems to be fairly mixed in trade this morning. We are seeing the Japanese Nikkei 225 is down more than 2% in trade this morning. So it's the case with Hong Kong. And specifically looking at Japan, the consumer durables segment, which is one of the heavyweight sector for Japan stock markets, are all in the red this morning. No news really either on tariffs or any other export-related issues that have come out. But we are seeing Japan is really reeling under pain this morning with the Nikkei 225 down about more than 2%. In fact, stocks like Toyota as well as Honda are taking a massive beating this morning. What's happening globally? Why is Asia so mixed in its response this morning, Avinash?
I think very difficult to actually pinpoint the reason, Kartik. But I think clearly, there are growth concerns that if tariffs do come in, and if they do come, that is going to further, increase the pain for these economies. I think growth in these economies are missing. I think if you look at Japan, clearly, I think for the last 10, 15 years, we have not seen this economy going anywhere. So my sense is that, yes, there could be some increased fear that if tariffs are not going to be favorable, that is further going to be a kind of a negative for their domestic economies. And most of these economies are looking outwards. They are looking at export markets like India to, propel their growth. So I think my sense is that some news in the pipeline might be there. And that's the reason you're seeing that, despite a good US market, I think today the Asian markets are not doing well. Some news flow should definitely kick in, and that could be the near-term reason for this.
All right, news flow should kick in, and that is all we all wait for every day. Well, thank you so much, Avinash Gorakshakar, for your inputs and for being here with us this Thursday morning with all those updates.